What a big day we're coming off of. Josh, you know, I was going to ask folks, hey, what's on your mind after what happened in the market yesterday? But it seems to me that your actions actually speak louder than your words, because I look at what you've done and you have some new moves that we need to discuss that I know our viewers are going to want to know about. First and foremost, and let's do this one first, you actually bought Robinhood, and it's a new position for you?
I can't believe I did this. I still hate it. But everybody hates it too much. I'm not going to be in this one long, so I don't want anybody to follow me into it. I could be out as soon as today. Judge, you know I'm more of an investor than a trader, but I looked at this. I've been watching this stock falling. It was in. Whose dog is that? It was in. We'll wait, Rufus.
Go ahead. I don't know whose dog
it was
is.
In a stock. The stock was in an 81% drawdown this morning. It was selling at a valuation of, it was a $12 billion market cap. Do you understand? This company was raising money pre-IPO in August of 2020 at $12 billion. So this was now selling below where some of the smartest money in the Valley, et cetera, were investing. So it had just been completely wiped out. I was looking at things like relative strength, completely wiped out. And then I saw there really weren't a lot of sellers below 15. So I pulled the trigger early this morning. I'm already up a bunch on a short-term basis. I don't think I'm going to stick with this one for long because I'm already long PayPal and Coinbase, and I don't want all three of them. However, I do think the stock is way too hated, and I do think that there could be some more upside. So we'll see what ends up happening there.
Look, so Cathie Wood is sort of in the epicenter of all of this selling that we've seen. You know, the ARK funds, the ARKK, the Innovation Fund has gotten absolutely annihilated in the last 48 hours. She's been out buying.
The drawdown in ARK.
Yeah.
The drawdown in ARK at its worst this morning was 48%, which is a deeper drawdown than that ETF experienced in March of 2020. Like, this is worse than March of 2020 for that segment of the market. To me, that's remarkable.
Yeah, well, part of my point that I was going to make is that she's been in there buying that one too. Robinhood and some of the other names that have gotten absolutely destroyed, and the ones that she believes in. I'm not finished with you, though, Josh, because you bought more of Matterport and PayPal. Tell me about Matterport, why you decided to buy more. I mean, it goes to this whole point that, you know, Kramer was making on the air this morning as Squawk on the Street came on the air, where he said, I'm paraphrasing, but this is pretty close. I think it's time to look. A lot of stocks have been cut in half, so I'm looking. And apparently so are you guys. Josh?
Yeah, Matterport probably never belonged where it was trading at the highs, but I certainly don't think it should be down 35 or 40% with absolutely no change in fundamentals whatsoever. So this was opportunistic. I own it around here. It round trip basically back to where I own it. I hadn't taken profits in it higher because it's a long-term investment for me. I really believe in what they're building. So that was easy. PayPal was more interesting. This was a stock that just refused to go down anymore. It was not going down in sympathy with the growth stocks yesterday, I had noticed. And today it was one of the first names on my screen in that sector to turn green. If you go back and look at last fall, it had found support at 179, 180. That happened again this week, and it happened in that December sell-off when the Omicron stuff first started. So for whatever reason, the buyers have been coming in repeatedly at that 180 level, and they did again this week, and I think it's just run out of people to sell it. I don't think there's anyone left that wants out. So I could be wrong, but I thought that was a pretty low-risk buy at this price as well.